Hi everyone, welcome back to the Reinventing Real Estate podcast. We are on episode 11 and we are delighted to be joined by an absolute industry titan today, Richard Simpson. And not only has he been a serial CEO, but also a founding father of the student accommodation sector, with 20 years experience in the space. So we are incredibly excited to be joined by Richard.
And it's a great pleasure to be here today too. Thank you very much for having me on.
Why we are so fascinated by Richard's journey into real estate is that it actually started very differently from any other guest that we've had on the podcast. Being that he started his journey in the army. So very, very different background, and we'd love to hear more about how that journey begun, key learnings, and what you've kind of taken into the real estate sector.
No, perfect. It's I'm going to say it's been a while since I've cast my mind back that far, but let me let me delve into the depths of time. So yeah, it was around 30 years ago. I left university and I wasn't ready to take on a normal sort of corporate job, whatever a normal job might look like. And I used to love my sports and I used to love team sports. And I was just really drawn into something which would really sort of galvanise all of that. And I was very keen to have a look at the military. I ended up applying to join the army, and I was lucky enough to be invited to go to Sandhurst, which is which is the training academy for the next generation of officers. And you spend a year at Sandhurst learning everything there is that you need to be equipped to be hopefully an effective leader of soldiers. And in theory, you are qualified to go forth and respond to whatever the UK foreign policy puts in front of the British Army. So it was one of those ones when you're really young and you're a bit of a Labrador and you're just quite excitable. The prospect of all of that is quite fun, quite sobering, but it's something to really get behind and it really energises you. So I went to Sandhurst. As I say, it's a year-long course. It's I think with hindsight, everyone says it was great. I think at the time you probably don't enjoy an awful lot of the course, but I think with all things in life, if something is really worth doing, it's probably got to be quite hard. And I think there's some pretty valuable lessons right there. In terms of corporate life and various things like that. But it's broken down into sort of three parts really. You spend 4 months being trained to be a soldier, a private soldier. And they don't assume you've got any prior experience whatsoever. So they really start from the very beginning about ironing, shaving, cleaning your teeth, getting fit, polishing your boots, lots of discipline. So you get you get disturbed the entire time. You don't get a good night's sleep. You're being woken up at 3 a.m, having not been told that you'll be woken up at 3 a.m. Someone empties your room outside into the parade square just because it's raining outside, and just get all the ironing unironed and wet, has to be washed again. And then you probably find yourself going on a 10-mile run without really having even woken up yet, and all that sort of stuff. And then, interestingly enough, I think the second third of it, so month sort of 4 to 7, is all about building you back up and creating a team. And then the last 4 months is then trying to get you to think about what it might be like to actually be a leader and be an officer. And I think the way that course flowed, as you'll probably be thinking yourselves with the three parts of it, is what they try and do is they try and break you down as an individual first, teach you some discipline. And then what they really try and do is build you back up into that team and then allow you to glimpse what it might be like to lead that team. And so the course is actually quite effective in instilling in you some really core values and some really core ideas about what good leadership looks like. And I think the core values cross over leadership all the time. And I think there's something about integrity. I think there's something about transparency and honesty. And I think there's something about really valuing relationships with other people. And you learn very quickly at Sandhurst that if you try and be an individual and try and be a bit of a superhero, wear your underpants outside your trousers and things like that, you're just not going to get very far. And an example I can give is, they used to have this thing where you used to do section races, having to carry lots of weight. Some of it were ammunition boxes full of sand, which could weigh 15, 20 kilograms. Other bits of it were just logs, which are quite heavy, and you need several people to carry them. But within a section, there might be a group of 10 of you, and you're racing 2 or 3 other sections of groups of 10. And you've got all these various things you've got to carry with you. And the first group to a truck, which a military truck was called a 4-tonner, just a truck. The first group to get there would be invited to get on the truck, and then the truck would drive away, and it would probably stop another 2 or 3 kilometres away, and all the other sections that hadn't got there first clearly were not invited to get in that truck, and they had to carry on running. And then the next team to get to the truck first got on the truck, etc., etc. And so what it taught you, it's quite a harsh lesson, but what it taught you is cooperate as a team, work together as a team. Everyone's got strengths and weaknesses, and no one's a superhero, but equally no one is the villain either. Everyone has got a role to play. You've got to find out what that is. You've got a pack horse somewhere who can just carry a lot. So you've got other people who are super good at map reading, and they can find the shortcut to get to where that truck has gone, and they can find the best ground to cross easily. As I say, all of these things were done in the countryside, so there were ditches, rivers, stock fences with barbed wire on and things like that. So there was always a smart way to go. And you had to find everyone's strengths, you had to energise each other, encourage each other. And the other point was, if you did get to the 4-tonner first, if you had one person who was lagging behind, that didn't count. The clock stopped when the last person got over the line. So you've got to really work with each other.
Wow.
So look, that's a long example, but it's it goes to the heart of what Sandhurst was all about, which was about teamwork, which is about valuing each other, understanding each other's strengths, and working as a team. And I think that was probably the biggest lesson from Sandhurst, which you need for the military, but as I say, I think you need it for life generally.
And I suppose in that time and the day-to-day of being there and forming relationships and bonds over this shared sort of extraordinary experience, what was that like? And did you sort of form relationships that have lasted far beyond that? And
yeah, definitely. So I think just building on the idea that you massively value relationships with others, and you value other people because of it. Therefore, as you suggest, I think the relationships you form are lifelong friendships. And I also think when you're going through something particularly difficult or tough or any adversity, then sharing that with others is a bond which is almost unbreakable, isn't it? And I think again, just casting forward, there's been some tough times in real estate over the last few years. There have been some tough times over the last 15 years in real estate. And I think there's no doubt that people have forged some of the strongest friendships and relationships, and a huge amount of mutual respect for colleagues, which is almost unbreakable. And I think that those are incredibly powerful. And it almost goes to what a culture in a business is all about. It starts with those friendships, starts with that sort of mutual respect and trust.
And then I'm really interested to hear that kind of, I suppose, part 2 and part 3 in that journey, in terms of, building you back up, making you part of a team. And then that third section, which is, the leadership, what it'd be like to lead that team. Obviously, after you've created those, and this, again, links back to kind of business, really any business that you're in. But
life in general, I suppose.
Life in general,
well,
yeah. Is there any friction that happens when you've built up this team and everyone is on the same page, and then people have to start showing themselves as leaders? How does that affect the dynamic, and how do you manage that?
No, you're right. That has to be very carefully considered, and hopefully it's a natural process to manage it rather than something false. I think to the heart of being a good team and hopefully a good leader is just transparency and just being very natural around things. I think that generates credibility. I think the second it's false and it's just being applied because it's come out of an HR handbook, or it's come out of someone else's advice and doesn't feel authentic to that person, I think it's really visible to everyone else, and I think that starts diluting the bond straight away. Interesting enough, at Sandhurst, we spent as much time thinking about followership as leadership, and part of the second phase to the third phase was that in the second phase we were built up as a team, and the third phase we really sort of started thinking about how we might lead that team. But that wasn't leadership the entire time. That was leadership from time to time. And so what was as effective was having a group of individuals who were part of that team who also recognised that there were times when they needed to button it, and they needed to really listen and recognise that there's many different ways of skinning a cat. There's lots of different ways of being quite successful, and sometimes it's really important to really back the leader and really support that leader. Now, that's not to say you don't challenge. I think you do, but you challenge in a good way, and you challenge at the right time. I think once the decision's been made, then I think it's important the team really back it and really get behind it. I think that's important. So I do agree. I think there's this thing about, I think all good leaders should also be very good at following, and I think you just need to recognise the right time for what quality needs to come through.
I think that's a really, really interesting point, isn't it? Because there's been such a massive industry around leadership and leadership books and leadership courses and all manner of things relating to leadership. But actually, not everyone wants to be a leader, and being part or being a leader also means being a follower. So it'd be really interesting to hear from you on what you think constitutes being, or that sort of fellowship territory, because I think that's something that hasn't really been explored. It's starting to be explored quite a bit more.
Yeah, I suppose it's almost, I feel like what Jamie's trying to say is it's almost obviously aspirational to lead, but perhaps not suited to everyone. So what are those distinguishing qualities between those two groups, and how do you know which one you fit most comfortably in?
And I think, again, that must be a very personal thing, and I would imagine everybody will interpret that in a different way. But to me, I think the best way of looking at that is no leader can ever have all the answers all the time. And I don't think leaders should put themselves under the pressure where they feel the need to have all the answers. I think it's absolutely fine to say, I don't know. I've not come across this situation before, or there's a dynamic or a facet of this situation which is intriguing, and I'm not quite sure therefore what the answer is. And you don't need to keep that as a dark thought in the back of your mind. It's perfectly fine to say that and share that with your team. I think that's quite empowering, because I think, again, you're being quite transparent about who you are. You're showing aspects of your personality which you're very comfortable to share. And I think what that does is it encourages your team to potentially step up and talk to you about that. So at Olympian, where I am now, there's a small but perfectly formed team of 18. And I think the aim in how we operate at Olympian is to get all 18 really adding as often as possible into whatever discussion we're having. It doesn't matter if it's macro stuff about the global economy, or macro stuff about trends in the living sector or elsewhere in the UK, or even micro stuff about some of the challenges we might be experiencing in terms of some of the transactions. I think for a leader not to be so resolute that they have all the answers all the time, which can switch off some of your team, thinking they'll just abdicate it to the leader to make all the tough decisions. I think when you're not sure, you should say you're not sure, because guess what? People that will surprise you will step up and they'll come up with a brilliant suggestion, which undoubtedly means that the outcome for the business is stronger because of everyone's contribution. So I think followership is about knowing when just to be a little quieter, but still to encourage your team to step forward and give their views on things, and clearly create a space whereby everyone is comfortable to share. There's no issue, no such thing as a stupid comment or a daft point. Just share it, and if it lands, if it has value, happy days. If not, it doesn't matter, move on.
And I'd love to hear, if you take us back 4 months to you kind of walking into Olympian Homes as the new CEO, what is that? How do you kind of walk into that team meeting? How do you start that conversation? just take us into that room and give us an insight into what that kind of looked like.
Yeah, so it's I think joining Olympian, very, very excited about doing it. It was a discussion quite some time in the making with Mark Slatter. He's the founder and owner of Olympian Homes. I've always highly respected the business. I've always been watching what they've been up to, and I think for the last 15 years, it's pretty clear to me that they've emerged as a very, very strong development partner for global capital to deploy into living sector developments, and have done it very successfully. Partnered with, in the early days, with Brookfield as they were growing their Student Roost platform, partnered with Goldman Sachs as they were growing the IQ platform, and then kept that relationship going with Blackstone after the sale. And then really what was super impressive is the last couple of years post Truss, when the real estate capital markets all but closed for a period of time for lots of very understandable reasons, Olympian carried on trading. In fact, I think over that period they've sold 5 developments on a pref equity JV basis profitably, earning some good fees, potentially earning some good promotes once those assets are sold. So the business has carried on finding a way to grow. So when you join a company like that, you are well aware that they've already got a very successful track record behind them, that they are clearly doing an awful lot right. And you know that you're joining as chief executive, so it's important that you strike the right balance of kind of ears open, mouth closed, listen and learn, get to meet the whole team, understand their values, understand their drivers, understand how they feel at the moment, because everyone's got a story. And clearly the last few years have been difficult. So I think everybody has a personal story to reflect on in terms of how they're feeling at the moment when they're in the office and in the room. And then at the same time, I just need to recognise that when anyone joins a small organisation, when anyone joins an organisation in a senior role, doesn't matter the size of it, you have an impact, and it probably initially can create more apprehension than it can create confidence. So there's something about landing well, and I think you do that by beginning to build rapport and trust, and I think you do need to spend time getting to know people, as I say. And then I think in the early days, it's all about showing that you can add a bit of value. And so what you really want to be doing is just throwing yourself in at the deep end, getting stuck into all the various meetings. Again, doesn't matter if it's macro stuff on future strategy or micro stuff on trying to sort of resolve issues on live sites, live projects, and just trying to demonstrate that you can help resolve problems. You can help get a better solution for various things. You can bring your experience to bear, and I think through a combination of all of that, you can start to establish your role credibly within the organisation you're in. And the truth is that never ends. So I've been there now 3 months, really enjoying it. Time has gone incredibly fast, but there's still an awful long way to go for me to fully establish myself within Olympian, but within every week that goes by, hopefully there's something which I look back on and I'm really pleased that we've achieved as a team, and then I can feel there's more of that sense of unity is coming through, and a sense of achieving stuff together.
That's really refreshing, isn't it? And certainly an amazing business moving forward.
I think with the point that you make about that kind of leadership not just being assumed from the offset is such an interesting one, because I think that isn't often thought about. I think it's that you look up to a CEO with all the answers, and that they're actually not going on this learning journey too. So having that transparency of saying, I haven't got all the answers, we're all in this together, we're all learning together, must be incredibly refreshing for your team, because, immediately you've got them, on side and on board, and, showing that you're all, going in the same direction and evolving, and almost you're growing into that leadership role as they're growing into their roles, simultaneously.
No, I think that's right. And I was, as you asked me that question as to how I felt when I turned up at the end of July this year to start at Olympian, it actually reminded me, because we've been talking about Sandhurst, when I when I turned up, having finished Sandhurst, so having become a second lieutenant, which is the most junior rank of officer you can be. And I then left Sandhurst and I joined my regiment, which at the time was based in Germany. And I had to drive myself out there. You would have thought, having spent a year at Sandhurst, that is not beyond the wit of man. So, but nonetheless, it's packing your car, your hatchback, and then heading east. Went up to northern Germany, literally in the middle of nowhere. This is back in 1998, so pre sat nav, pre Google Maps and things like that. So it really was the old-fashioned map sheet on your lap at 2 a.m. It's raining outside. You can't quite see the road clearly, so you don't want to spend too much time diverting your attention onto your lap where your map is to see if you can follow where the hell you are and where you're trying to get to. But nonetheless, emerged the other side of a wood, and there was this big barbed wire camp, and that was my regiment. Understandably, those things in those days were not well marked for obvious reasons. Didn't want to flag exactly where they were, so you had to follow your nose. And it was definitely a small initiative test to see if you were able to follow your wits and find where you've got to get to. But nonetheless, got there early in the morning. Didn't have a huge amount of sleep, and then got up the first really early the following morning, and 8 o'clock on this big parade square. I was 23 years old, just finished Sandhurst, and I turned up, and in front of me were my troop of soldiers. And they ranged from a sergeant all the way down to a few private soldiers, a lot of which had seen quite a bit of operational experience. So some had fought in the Gulf War. They'd all been to Northern Ireland several times. Some had been to Bosnia with all the genocide which they had to experience. So they were pretty hardened individuals. A nice way of putting it is that they were probably quite cynical about someone new coming in without much life experience or without much real experience to come in and, in theory, lead them. So I'll never forget that moment when you stand there. They're standing around you. Because it's the military, it's quite disciplined, because you wear the same uniform, you look similar to them, and you wear rank which they will respect. Well, an important point is they will respect the rank, but the jury's out as to whether or not they respect you, and you have to earn that. And I think that's really where it comes from, and it's all about what you do. I mean, your heart's beating pretty fast. You suddenly feel as if your mouth is very dry. Your head's spinning. You've got no idea what to say. What do you do? And I think that is the ultimate test of leadership. But it's not even a military context. It's what we do every day when we go and pitch, when we go and meet new clients, or we go and meet new capital partners, or we're meeting new people, or whatever it might be. We all go through that same experience multiple times, and it's about what do you do to fix that. And you take that condor moment, and then 3 seconds later, off you go, and hopefully it goes really well. But for me, that first time standing in front of that troop of soldiers, when I had no experience at all really with the military, but yet somehow I had the authority to show some leadership. What do you do? And I think therefore you've got to be very human. You have to recognise what you don't know. You have to recognise their skills and experience, and then you have to recognise also that you need to invest in the team. You've got to build a team. It's not just instant. You don't add water and it's there. You've got to work at it, and it can take time. And actually, the journey we had was amazing, because there's quite a lot going on back then, and so we had a few months just to do some training together in Germany to get ready for whatever we had to go and do, and then we deployed in operations, and then incredibly it all just fits into place very, very well. The training that you've had at Sandhurst in terms of trying to assess situations and then deploy troops accordingly. They themselves have their own hierarchy in terms of their roles in those situations, and everyone's extremely well trained. People, it all just clicks into place and it just happens. And the second you've had that one deployment, and again, it's not just a military, it's civilian too, it's within corporate life. When you've achieved something together that's been really tough at the time, then suddenly you have that electrifying bond and that camaraderie, which empowers you to do some amazing things going forward. And again, I think that almost comes back to the heart of the brand within corporates. It starts with the people, the culture you have, and I think it's those relationships which are everything.
Absolutely. So in terms of that energy, like you just touched on, I suppose, we're all exposed to difficult markets, that have run their course over many years, and no doubt will do going into the future. But how do you keep your team, excited, invigorated to get on to the next challenge when perhaps things don't go, the way that you wanted?
No, it's a great question. And of course, as we say, the last few years have been very, very difficult for real estate generally. And sometimes you feel like you're working incredibly hard just to stand still. And I think for a number of businesses with some various legacy issues, looking over their shoulder in asset management, be it assets they thought they'd bought really well, which actually transpired to have not been the best buy, the value's fallen, there's legacy issues, could easily be fire stopping cladding, it could be other issues. It might just be that consumer demand's moved on and there just isn't enough cash to pump into the asset that you really want to have, and therefore it can become problematic. And then it's not so straightforward to engage on the capital side to attract that capital to come in, or if the capital is available, it might be prohibitively expensive. So that is not clearly the best environment to energize and feel as if the morale is really cooking on gas. So I think in those situations, again, I think there's this point around being quite honest about the situation you're in, because I think if you have people working under false pretenses, i.e. things are great, then it's always going to hit a cliff edge, and it's always going to when the reality comes in, it's going to cause problems with trust between the team and the employee and the employer. So I think honesty is really important. I think realism is important. So I think you should always be prepared to reassess your plans and what good looks like, and it can change very fast. And I think the best example of that recently was the Liz Truss mini budget, which I won't say any more on because we're all incredibly well versed in it. But essentially, businesses, especially in the living sector, up until that point, were performing incredibly strongly. Certainly on the development side, incredibly strongly. I think the investment side has been much more resilient post, but on the development side had been performing pre-Truss very, very well, and then suddenly post-Truss, incredibly difficult. And so I think you need to be able to readjust very fast and change your plans and adjust your strategy, and then communicate it as quickly as you can do. I think you need to be able to reassure your team and remind your team about whatever you believe are the unique aspects of your business and where you think you have competitive advantage. And really remind people that this place you're working at is special, and therefore you're likely to outperform by being here, rather than potentially sort of switching off and thinking about going elsewhere. And I think those are really important, because in those difficult times, people need stuff to cling on to, don't they?
Absolutely.
Whatever it is, it's hope, or it's a clear plan, or they feel like there's a leader that is listening and looking at what good looks like. And then there is the ugly word, the R word, remuneration. I think it is important that alongside your rebalancing of whatever your plan or strategy is, to get through the short-term volatility, making sure that people get appropriately paid if you deliver it, even if it's a long way away from what ideally you would have achieved a year or two before when you were looking forward over that period of time. And I think across all of that, it's a good framework to continuing to have a performing business in difficult times. And then the other aspects of it are always where you can inject fun. I mean, at the end of the day, everything is serious, of course it is, and you want to perform as best you can, but it's also got to be a really fun environment to work in. So trying to have as much fun as you reasonably can, as often as you can, in an appropriate context, I think is everything. Because I certainly know, even myself, I like to look forward to going to work, and I almost have a little smile on my face as I'm coming into work, thinking there's always going to be some really good conversations, some good banter, and even stuff going wrong. Sometimes you can get gallows humour and actually make a bit of a joke out of it, because at least that's the best way to process it and be able to move forward. And I think across all of that is probably the best way to try and approach times. And I think, it's probably going to be on a similar basis for the next year or two, I would have thought. So, and what I do look forward to are those who've entered the workforce over the last 7 or so years. I often speak to some of the team at Olympian about saying, well, look, when the market corrects in the right way, and we start seeing capital getting really excited again to deploy into the living sector because of all of those fantastic macro facets of it, it's an incredibly fun place to work. It's just the best experience. You get the best times, and some of the most valuable sort of experience of any sector anywhere in the UK within real estate, within development, within investment, certainly in the living sector. So there's a lot of fun to come, and I think that is worth looking forward to as well.
For sure. And I think the living sector is such a dynamic place to be, isn't it? I mean, there's so much innovation in the living sector, in student housing, in BTR, and obviously what we talked about before in co-living, whether that's prop tech or whether that's the experience of people within the building. Tell us a bit more about that and how you're sort of looking at that at Olympian, or how you think about that more generally.
Yeah, so I think the journey within the living sector has been pretty clear that being really listening to what consumers, the tenants, want, has become a growing and stronger component part of the living sector over the last 20 odd years. And what do I mean by that? Well, I think in the early years, it was mostly, I think the sector was mostly around property development. Clearly, in the early years, it was principally student accommodation. There wasn't really any BTR at that stage. And I think it was about developing the assets. I think the operating platform was largely an afterthought. And I think because of it, initially was people working incredibly hard at it, but nonetheless probably wasn't as strong as it could be or needed to be. And I think the product in the first instance, there was so much pressure on, there were so many question marks around whether or not the sector could really work, that I think the specification within the buildings was very basic as a consequence of trying to reduce costs and therefore maintain lower rents. And people were looking at rental. If you can compete on rent, then you've probably got a viable product across the PRS. But as I say, I think the fundamental question mark was around saying, how can purpose-built student accommodation charge a premium to the HMOs? And why would students pay more to live in PBSA when they can live in an HMO? And I think there was, as I say, quite a few questions around that, a lot of probing from all aspects of the market, which led to probably a lack of willingness to innovate and incorporate some really great technology or some really great thinking behind how you might operationalise. And I think alongside that, at the same time, we had some very active residential developers in town and city centres, so much more in the 2000s than we have now. Even volume house builders were very happy building apartment blocks throughout most towns and cities. Clearly now it's largely Berkeley, but back then there was a lot of that going on. And again, the market was sceptical as to why would you build something, student accommodation, which had a 6% yield when residential could be sold at 3.5 to 4. So why would you essentially build a block of flats that could be open market resi, which could be sold at 4% yields or 3, if the equivalent rental yield, rather than actually sort of reduce the value of it by a third artificially by making it student accommodation. So I think across those, it wasn't a natural area for a lot of innovation and risk taking. But certainly the journey has been prolific and has been incredible, and how residential has become mainstream in terms of investors looking to collect income streams and clearly not looking at open market residential, but looking squarely at PBSA, BTR, co-living, etc. And I think with a very broad acceptance that tenants in the PRS will pay whatever a sensible fair rent is for the services and quality of product which they have, has unlocked everything. So now we see high-rise, high-density tower blocks in prime locations that you just didn't see 15 years ago. And of course, they're being rentalised in a very appropriate way for the quality of that amenity. And so suddenly the cash, the value of the assets is all at a level that you absolutely do want to invest in giving the best for the consumer, for the tenant. And you can see that by how the product has increased. It's night and day, isn't it? If you just look back 15 years, even if you adjust for wear and tear on those buildings, just the quality of what's being built today
it's remarkable.
To what was built back then is unbelievable. And I think looking forward, I think that now there's some really good operators out there. Lots of the large portfolio businesses have got their own internal proprietary brands, which look like they are doing a really good job. You've got Homes for Students with Martin Corbett and his very capable team that have been expanding rapidly over the last few years. They have a fantastic body of knowledge in terms of understanding how to really operationalise the various assets all across the UK. And I think they are doing a good job, and they're adding a lot of value into those insights. But certainly I think looking forward, it does feel to me as if there's a couple of opportunities in particular. I do think that the vast majority of purpose-built accommodation built more than 5 years ago is potentially at risk of becoming a bit of a squeezed middle. So the buildings themselves they're absolutely fine. The rental price points, because the buildings are fine, have always been the middle ground of what purpose-built residential would charge. But nonetheless, there's quite a lot like them in similar markets, and therefore to really differentiate yourself, I think you would go either side of that. And what do I mean by that? Well, I think there's still a very strong market for the aspirational purpose-built residential developments. So I'm a big advocate of the big tower blocks in the prime city centre locations with the fantastic specification, with all the innovations we were just touching on to really help that customer journey from the sales and marketing at the very start all the way through to the checkouts and potentially even bad debt management, etc., and everything in between. And I think the quality of the product absolutely commands a premium, and there is no doubt, even with cost of living concerns, rightly so, cost of living concerns and how that might translate on sustainable rents going forward, that if you have those aspirational products where there is so limited competition in any markets across the UK, even in London, that those assets will continue to outperform, and they will definitely outperform the squeeze middle, which is the large rump. There's, in terms of student, I think we're now looking at 700,000 or 800,000 purpose-built bed spaces around the UK. About 300,000 of those are university-owned. So within reason, you can park the 300,000 just from a quality perspective, although there are some really good assets, especially some of the more modern ones within the university portfolios. But then you're left with about 500,000 sort of privately owned. Of those, less than 20% would fit into that aspirational element. So effectively, you're looking at no more than 100,000 bed spaces across the UK relative to your 2 million plus full-time students. So I think those will always market incredibly well for the aspirational students, be they international or indeed UK domestic students. I think the other very clear opportunity, which has been discussed quite a bit, so I'm not going to claim any original thought here, is just to provide that affordable product. And I think looking at the repurposing of the first and second generation kit, clearly that doesn't exist in BTR because the sector's not old enough, but it absolutely does within student accommodation. I think what's really interesting there is that there are quite a few assets where they have some regulatory issues, some compliance issues, probably still legal to occupy, but perhaps difficult to establish their liquidity unless they're discounted. And I think we're beginning to see valuations come down to accommodate that, and they are coming down to such a level whereby I think I think sophisticated investors, sophisticated buyers can see the opportunity to buy these assets, reposition them fundamentally, not a lick of paint and some new soft furnishing, but potentially almost going back to frame, perhaps not quite that far, but potentially being prepared to go back to frame and rebuilding these things, which will through the stroke of that asset management will cure regulatory compliance issues. At the same time, you have done a full comprehensive refurbishment on that building, so you've brought it up to modern standards. And from a consumer perspective, the paint in, what the customer sees when they're coming around the building. And there is still the ability to have the rental profile at a very, very attractive level within that market. And because of the way the economics seem to be working at the moment in terms of what you're paying up front to buy the asset per bed, the cost to do that pretty material asset management refurb, compensated for by a tumbling yield, a net initial yield, compensated for by an element of reversion of the rent which you're looking to close, and compensated for by the fact that suddenly you have an investment market which would see these as giving high levels of assurance and investability, and blue chip investors looking to buy. Actually a really, really attractive portfolio, which is I think the key aspect of it is that it would be looking to operate in the affordable part of the purpose-built universe. So I think across those two ends, it's bookended the sector in terms of innovation. And I appreciate this is more the sort of nuts and bolts construction or development related innovation. I think you can bookend the squeeze middle by the brand new aspirational high rise, high density residential towers in core and key locations across UK cities. And then the other side, which is more of the affordable, but it's repurposing the first and second generation student accommodation. And I think across those two, I think there is a lot to get quite excited about for the next few years.
Richard, I think that's a really, really interesting point on the bookended strategy. And I suppose the question that the market's going to be considering when they're listening to this podcast, and certainly a lot of people in the student housing market, is, well, I've got a selection of middle-of-the-road PBSA bought maybe 10 years ago, maybe 5 years ago. What happens to those assets over the next 5, 10, 15 years? And then the question is, what do I need to do to those assets to make them more attractive?
So I think the base case and the upside case is probably going to see some pretty strong performance from those assets over the next time period because of all the macro factors that we all know that there's no point going into detail of, but the chronic shortage of residential, the growth in student numbers, principally at the moment being supported by UK domestic students, which I think will help the sort of middle ground for PBSA demand, and the likely recovery of international student numbers at some stage in the future. So all of that, supported by UK demographic growth, is going to be highly supportive of the base case, and the upside case could continue to see outperformance. But I think there's probably an increasing risk for the downside case, that sort of long tail, that could strike in a low probability scenario, but one where demand for potentially your mid-price cluster beds in your medium-rise buildings, where there are thousands and thousands of those across your top 30 or 40 UK university towns and cities around the UK, which could get caught. And of course, what happens to the squeezed middle? Classic economics is everyone starts competing on price, and it's the worst place to be. And it's a place when you own these assets or running a business, you simply can't afford to be, because then you are simply a price taker, and you have very, very little control over it, especially where accommodation is relatively generic, i.e. from one asset to another, it's difficult to see the unique selling point or that clear point of differentiation which gives you a competitive advantage. And I think in that instance, I probably wouldn't overplay the operational leverage from one brand to another. Why? Because I think by and large students are a very temporary customer by definition, and therefore it's difficult to build up such strong brand loyalty in a couple of years. So I think at that stage there is a real risk that rents would have to be discounted. And of course, we all know how the market works. There's a real herd mentality. When one starts, it goes round like wildfire, and sure enough, by the end of the day, most of the rest of the market is moved. And of course, where is that hard floor? Well, who knows? It depends on finding demand and getting tenants to sign tenancies. So potentially that's a dangerous place to be. But I think the way through it is to ensure that portfolios are well diversified. I think the way through it is to ensure that active asset management approaches to the assets is being undertaken. So I think that refresh, that life cycle maintenance, plan preventative maintenance, all of that being kept on top of, I think is really important. I think not being afraid to reposition the assets either. There are certainly some fantastically well located second and third generation PBSA assets, which actually, if they had more investment in, could become more aspirational and potentially you could break through into the premium end. No reason why not at all. I mean, in fact, some of those in some of those locations, planning's moved as much as everyone belittles planning's moved on quite a bit in the last 10-15 years, and some of them are probably ripe for regeneration, complete knockdown and redevelop. You've got to think about weighing up some of the embedded carbon aspect in that. Potentially there's extensions that could be done, or potentially there's a part retention, part new build. But I think those are very viable strategies now for sure. But overall, I think you're right. I think the base case, the upside case, is probably that the squeeze middle ain't going to be squeezed that hard in reality. But like all of us, it's prudent to start looking in and really assessing the downside scenario.
Well, especially if you're a long-term investor, I suppose, or a core investor coming into the market, it's what is going to be really future-proofed, and how can I invest in a segment of the marketplace that is going to be solid not only now but in 20, 30, 40 years time. And I think you've sort of clearly set out the reasons why you think the affordable end and maybe the more premium end are the two areas that are quite sort of attractive, and I think we agree with that as well. I think certainly on the affordable end at the moment, we've had a lot of private equity funds and just general funds knocking on the door saying there is this wave of domestic students, as we know, coming into the marketplace. We've seen that this year, we saw that last year, all the way up to 2035. And how can we cater for that audience in a better, more sophisticated way, and not just rely on them either living in sort of cruddy HMOs or really poor quality PBSA? How can we do something that's that bit better, that gets people excited and wanting to live there, but also that caters to and sensitive enough to the fact that people are price conscious? So I think that's a massive trend at the moment.
No, I completely agree, and undoubtedly we've seen over the last 2 or 3 years, because of the tension in the real estate capital markets, I think value is adopting more prudent approaches to valuing first and second generation student. It wasn't that long ago that pretty much all student in certain areas was just valued on the same basis, same sort of cap rate, pretty much the same sort of rent. There would be a difference based on the quality, but maybe that difference was harder to spot. Now, there's been a real spread and diversity which has emerged over the last few years, which I guess is a sign of a maturing sector, and or is a sign of a mature sector. Probably students been around too long now to be calling it maturing, but I think it's mature. We saw that in the hotel sector. We see it in commercial sectors all the time, where there is almost inbuilt obsolescence as you see the life cycle of the building. Therefore, the asset value reduces, and it suddenly hits a sweet spot where capital comes in and refreshes it. And I think that's great. And I think for the first time, almost in the history of the PBSA sector, that now works. And it's really interesting because it works at a time when bill costs have never been higher. And even looking at bill costs now, it's not as if they're flatlining. I think if you looked on a like-for-like basis between now and last year, it's pretty steady. You'd probably say it's gone up 2 or 3%, but I think that's not the story. The real story is how much more technical construction is now as a result of a number of factors, principally building regs compliance requirements and the changing way to be compliant through fire safety, gateway 2s and 3s, etc., has really driven has really driven quite a big increase in costs. And I would say that build costs are now 8% higher than they were this time last year, which is quite a material increase. In London, that construction accounts for half your development costs, so that's 4% on top of your total development costs from this time last year. And then in the regions, construction accounts for 2/3. So it's probably 5% on top of your total development costs. So it's quite a material extra burden. And when you're looking fundamentally at repositioning assets, the biggest thing on your mind has to be your input costs and then your output value. And the input costs have never been higher, as I say, but nonetheless, the formula works, the equation works. You can buy these assets, you can reposition them, you can rebuild them, redevelop them, and you can realise an appropriate amount of profit returns for investors. You can pay the developer appropriately, and there is still a well-positioned asset in the market which has found its place in the pricing ladder appropriately in that marketplace to be confident about its future long-term performance. So I think that's really interesting. And of course, if it's working now in the volatile world of capital's not quite sure if it's ready to come back, capital's quite expensive, cost of capital understandably with all the risks in front of us, even though it's getting a little cheaper, it's still very expensive, or still quite expensive, and the input costs of construction are high. It works. So that to me would validate that as the market stabilises over the next few years, there could well be a very active front to open up in terms of really looking at that first generation repositioning. And a bit of a plug for Olympian, but I would say that Olympian's very much ploughed its furrow as a developer, and I think as we established earlier, has done it incredibly well over the last certainly the last 10-15 years. The business actually has been around for the last 34 years, and I think there is a lot to be said for a business that's carried on trading as a developer for the last few years, in particular being very active with development, because you're in the market and you're talking to your subcontractors, you're talking to your supply chain, you're working with local authority, technical officers, you're working with those people that actually now run the gateways for these fire safety solutions, and you're actively talking to them, negotiating with them, working through what a pragmatic solution to all of these challenges is and are. And there is a clear view within Olympian as to how you can take development capability and put it into asset management repositioning. I mean, the truth is, with the material refurb of an asset, it's development. It might be slightly rebadged. You might think it's got a slightly lower risk profile. I think you can debate that for some time. I think the reality is it's just development, and therefore, actually, developers have quite a few other strings to their bow that they could get into, and therefore, I'm personally quite interested to see how this might evolve, because it could well be something interesting for Olympian to partner with institutional capital to meaningfully deploy into this space over time.
I think it's a fantastic new strategy for Olympian, and one that I'm sure will be incredibly well received by the marketplace, because frankly there isn't that many developers that are offering this sort of service, and developers that know the market so intimately and have that track record and experience in the sector. So I'm sure that it is something that will be a real growth area for Olympian, and I'm sure we're very excited to see how it all sort of pans out.
I was just going to ask you, and I know we kind of touched on this before, and selfishly, obviously, my personal, interest and area to play is co-living, but, just, I suppose, your kind of excitement for the wider living sector and how you see, opportunities in more nascent sectors, evolving perhaps maybe in a similar way to how you've seen the evolution of PBSA, maybe how you see it evolving differently, but being, again, on that kind of early journey, early adopter, where do you see that kind of evolution going, and what excites you about it?
No, you're right. It's interesting the way things have evolved in the UK, that purpose-built student accommodation sort of blazed a trail for the other aspects of PRS to follow. And then latterly we've had BTR, and now very recently we have co-living, where potentially it should have been the other way around, shouldn't it? Shouldn't it have been BTR or co-living first, and then PBSA as a subset of co-living or BTR? So it's interesting. I think therefore the opportunity must be pretty profound within BTR and co-living. Just casting my mind back, just think about the early movers, the early adopters of student, and just seeing how successful they've been. I think GIC, so the Sovereign Wealth Fund of Singapore, one of the sovereign wealth funds, they were very much the early adopter of student accommodation in the UK, and they partnered with Unite, and they set up a development joint venture quite some years ago. I think it was back in 2005. And the portfolio they have today, which has had the benefit of all of that yield compression, all of that rental growth, all of that collective experience in terms of creating a brand for all of those assets which have been developed or bought through investment acquisitions, is absolutely incredible. And so they have a sort of market leading platform, clearly with incredibly deep pockets, no doubt will do more in time. But nonetheless, the rewards for the early adopters are incredible. And I also think about some of the early backers too. So thinking about Barclays Bank, very, very supportive of student accommodation in the early days and really got behind it. So I was talking earlier about some of the kind of nagging doubts that the capital market had broadly in the early days about student. Not that they didn't believe in it, but nonetheless needed to see more evidence around tenant demand for PBSA at a slight premium compared to HMOs, and then why you would develop residential but artificially reduce the value of it by 30% relative to open market resi when you effectively could get planning for either. But nonetheless, Barclays really supported it and built a very big book, and Mark Quigley was at the time leading the charge at Barclays and really backed the sector very hard and was incredibly supportive at that time. Absolutely helped build an incredibly profitable business within Barclays. I know he's moved on since to Beaufort, but and it's continuing to do something similar. So if we fast forward to today, I think that it is an absolute certainty that co-living will evolve and mature into being just as attractive as BTR and PBSA. I think fundamentally the co-living story is one, it's residential units in prime locations. Clearly the specification and how it's presented and how it's managed will be dictated by the brand that wants to come and operationalise it. Are they premium? Are they budget? So there's no point trying to do a generic version of that. That is very personal to each individual business. But the fundamental is it's more residential units in a country where we are severely lacking residential units, where there is growing demand to rent, and where that demand looks set to grow for decades to come. And what I love about co-living is it's a brilliant hedge on the resi sector, i.e. with student, if there are any headwinds, and let's face it, it would be naive to assume there won't be any, you are not diversified if you have single exposure into student. I think with co-living, it's almost the thing that fixes and cures that potential risk, because generally speaking, co-living provides for the aspirational students and can accommodate as tenants the international students and those UK domestic students that want to live in really high quality, well amenitized space, but at the same time can rent to anybody else that the owner of those assets would like to. So how well diversified is that to have in your UK living portfolio or your European living portfolio? And I think it's only a matter of time, and I do believe the thing that's holding it back at the moment is purely this capital market volatility. It is not a comment on co-living per se, but as soon as that begins to stabilise, we'll see the capital absolutely coming alive to these brilliant co-living opportunities.
Yeah, absolutely. Couldn't agree more.
So I suppose going back to your days in the army, and you've come in to a new unit, you're leading that unit, you've deployed into some operational goings on. take us into a circumstance where, you know, there's been a really, really challenging environment, and then how you've dealt with that environment. I think listeners would probably love to hear a bit more about that and understand that. Certainly I'm very interested in it.
So I'll keep this light, but so soon after I joined my regiment, which was in the actually at the end of '98. In 1999, we deployed on an operational tour, and it was the point in time when NATO was looking to step in to stop the genocide in Kosovo, and there was quite a military offensive, both in Serbia on Belgrade and on the military capability in Belgrade, but also within Kosovo itself, and so that was in the autumn of 1999, and I found myself with my troop still pretty green and wet behind the ears in an operational theatre, and looking to sort of stabilise things as best we could. And there were some interesting scrapes there. One of them was a great story about the power of tea. There was an organisation which NATO had equipped, which were Kosovo Albanian, to help fight the Serbians, and the Serbians were in Kosovo at that time, or had been, and they were pushed out. And the organisation was called the KLA, the Kosovan Liberation Army. And at the end, and it's quite sad actually, but at the end of the incursion and the VJ army, the Serbian army, were pushed out of Kosovo, the KLA were asked to lay down their weapons, because it wasn't great to have an armed militia cutting about with quite modern weaponry. Some of them wouldn't lay down their weapons because they'd fought for independence and liberation, and they weren't prepared just to put down their guns and go home and go back to their civilian life. And there was an element of wanting to ensure the stability and the freedom and the integrity of Kosovo for future generations, and do it themselves rather than NATO do it for them. And I completely respected that point, but at the end of the day, you can't have armed groups roaming about the place. So what we had to do, we had to actually go up to the mountain range where a lot of these militia were holding up, and we had to find where they were and then find a way to force them to lay down their weapons in a way that would be would be without bloodshed, etc., and in the best managed way you could. So we found ourselves up in the mountain range. It was right on the border with Serbia, which was another issue, because some of those troops some of the KLA were then beginning to make incursions into Serbia and attack some of the Serbians on the other side. And so there was time was of the essence to sort of disarm them. And we found that actually just going straight up to them, having a conversation with them, having a really hot cup of tea, and the surroundings at the time. So this was September, October. Winter was coming, pretty high up in the mountain range. It was with wind chill. It was probably sort of -10 to -15. So it was properly cold. And we, as I say, we found that a cigarette, not advocating cigarettes necessarily, but at the time, a cigarette and a really hot cup of tea, and sitting down and having a conversation, obviously using interpreters, was the best way to pacify the entire situation. And just by demonstrating to these people that we could empathise with exactly what they'd been through, we understood their position, but at the end of the day, it was untenable. NATO was all around. The mere fact a few of us were chatting to them, I left them under no illusion that there were a few hundred more just a few hundred metres away, to really sort of underline the fact that enough was enough, and it was time to end. And indeed that was it. And matters did come to a head, and they disarmed and largely dispersed back into civilian life in Kosovo.
Incredible.
Wow, that is really, really interesting. And I'm sure, that's something that probably different stakes, but that you take throughout your kind of career is, sitting down and just talking, and actually what you say in terms of empathy being, so important in some of those problem solving kind of high stakes, environments, even in the sector, the real estate sector itself, and just, corporate day to day in managing a team, showing that, you have empathy, and, things might not be going the way that originally were planned, but the purpose of laying down your arms in a different way and moving on is actually a really important lesson, I suppose, to carry through life.
I think so. I mean, I think the key one, as you say, is communication, isn't it? Sort of, it's so easy to hide behind email or WhatsApp or whatever it might be. But actually, invariably, having a conversation with someone face to face, it's incredible how much common ground there is across most things, and invariably how much misunderstanding there is as well. Yeah. Which, when you are able to sort of chat things through, it's incredible how you can de-escalate situations quite quickly. And I suppose also you can start working on a common resolution, which, let's face it, is probably not the ideal solution for either party, but it's a pragmatic compromise, which is the way most things go. So I do agree. I think being able to build a pretty decent rapport and a pretty decent relationship with your broad network within real estate is incredibly useful.
I think something I wanted to ask you as well is, obviously now you're known as being a real industry leader and sort of charting the course of where the student market has got to in a lot of different ways. But after the army and joining sort of various different businesses and then obviously landing up in the student housing marketplace, how did that all evolve, and what have you seen over the last number of years in the sector, and how have you progressed your career to get where you are today?
So I joined Unite in 2005, and
so this was just as the GIC money was starting to come in.
Correct. Yeah. So just as GIC money was coming in, and just as a Jersey property unit trust had been created called USAF, the Unite Student Accommodation Fund. So it was the early investors were coming in. There was also another joint venture which had been established a couple of years before with Lehman Brothers. And I think the interesting sort of anecdote there was around, and I wasn't there at the time, but the interesting anecdote was the amount of due diligence that Lehman's did on what they could do in case Unite failed, just to protect that joint venture from their perspective. But conversely, Unite didn't really need to, or didn't think it needed to, ask the question about what happened if Lehman's failed, because it was one of the biggest banks in the world, and surely that would never happen. But of course, just a few short years later, it did. I guess that underlines the need to do your due diligence properly and thoroughly at all times, and always think about those highly unlikely scenarios, because from time to time they happen and you need to be ready. But no, joined Unite in 2005 and joined as a land buyer. And at the time, Unite, I think, had really good vision and clarity about the opportunity within student accommodation within the UK. Clearly, it had been founded by Nick Porter. He was still chief exec at the time when I joined, and there was an immense belief that this sector would really come of age. As I mentioned, some of those kind of sceptical comments which were floating around the market at that time about student, there was clear belief at Unite that it would come good, and it would come good in a very material way. It coincided, of course, with Tony Blair's desire to double the amount of students within the UK, wanted to liberalise UK universities to go and be truly globally competitive, etc., etc. So I think there'd been some very smart scanning of the kind of political macro landscape backdrop as to opportunities, and I think Unite was clear in its purpose. And I think that's probably the first thing that I've taken away is having that clarity of purpose, having that core belief because we all know that volatility on a daily basis, a weekly basis, is going to go up, it's going to go down, it'll be positive, it'll be negative, and you mustn't just bend with the wind. If the situation changes and you believe permanently changes, that's fundamentally different. But the volatility, I think you have to be prepared to smooth through, and I think you need that resilience and drive in order to be able to do that over a long period of time. But I felt that immediately at Unite, having joined, and that created a fantastic culture of being energetic and hungry and wanting to go out and do some amazing stuff. And the company wasn't very big in those days. It was a pretty small FTSE 250, and so it didn't have much of a balance sheet to be able to go and make these things happen. Hence the joint venture with GIC. Hence the property unit trust to create USAF, which is other multi-managers investing alongside Unite. Hence the JV with Lehman Brothers, the short-lived Lehman Brothers joint venture, looking for other people's capital to actually help Unite grow. But nonetheless, there was this real passion to grow. So landing at that stage as a land buyer meant it was very much blue sky. And I think there wasn't a lot of student accommodation back in those days. I think yes, you had your 300,000 university-owned bed spaces, but I think the rest of the market added up to less than 100,000 corporately provided bed spaces. So very, very significant opportunities to go and grow the business across the UK. And the business absolutely capitalised on that. I think what happened in terms of 3 or 4 sort of parallel strands, one was the operational capability of the property management business just grew exponentially. So year on year, they got much better. They used the insight to recycle that into adjustments on the strategy for following years. There was, as you mentioned earlier, Jamie, there was increasing investment for tech to really help enable that, not just the management, but also the use of data to create insights which can land into plans. So you saw the genuine industrialization of a commercial property management capability, and then alongside it was really just the growth in terms of the development side. And Unite in those, so I left in 2018, but across those years, Unite principally grew through property development. So did an awful lot of development. The early years stuff was incredibly profitable. So we used to target a 9% plus development yield. So when it was being valued at 6%. We're making 3%, or at least shareholders were making 3%, which is potentially up to 50% profit, and managed to keep that going for the first 4 or 5 years. And I think as competitive tension sort of grew, more entrants came in, started having a bit of Unite's lunch. That would inflate land prices, and some of that profit rode back a little bit. But very much after the 2009 financial crisis, there was a very clear opportunity to grow, and the business had weathered that financial crisis extremely well. The chief exec at the time, Mark Allen, who then went on to be the chief exec at St Modwins, and is now currently the chief executive at Land Securities at Landsec. I think an incredibly astute, very considered strategist, incredibly numerate, and actually very interesting. Having sort of painted or described him using those words, was equally an incredibly good people person. So very, very good at building teams and energising teams and managing teams. So he was and is, I think, an incredibly good real estate leader. But anyhow, did an incredibly good job through 2009, through the financial crisis. I think everybody probably felt like they were on the brink at that stage. Unite was no different, and incredibly well managed to successfully come through the other side. And then, of course, as soon as you are through the other side, you're the winner, and you have opportunities to exploit. And then it was all about raising capital. At that stage, the business had grown pretty steadily on the stock market. Market cap had increased enormously. And because occupancy, so similar to now, because occupancy had stayed incredibly strong and rental growth had been unbelievably robust, that time-honoured story of, in times of economic volatility, more people focused on education, or people want to build their CV even better and therefore more likely to want to study at university. Therefore, demand was incredibly resilient. And that really helped investors get on board. And at that stage, started raising equity serially. So every year, for quite a few years, would raise equity from the listed shareholders. And all of that was used to invest in the development pipeline. And so many thousands, tens of thousands of beds were developed over that period of time all across the UK. And it was an incredible opportunity at that stage to be able to grow the business. And you can imagine the experience you get, all the learnings, working with different people, working with different teams, working in different parts of the UK. Incredibly rich experience. Clearly lots of lessons to be learned as you do that. But the other aspect of Unite's growth over that period was also to buy income producing assets from others. And we bought the Cadea Savills portfolio. I think that was in 2012, it may have been 2013. We bought the Arley United Bank portfolio in 2015. And that was an important addition to the portfolio, because you could see that with the cost of capital being quite low, being very low, and property yields being much higher, you could see there was naturally a yield compression play out there, and you were looking to get on top of that as best you could. So you wanted to buy exposure to your asset class, which is what we did. And over that period of time, as I say, the business did grow materially, was very successful. It very much kept, which it still has, it very much kept its very strong culture, which is a very caring, very generous culture, very much focused around the student, the tenant, the consumer, but equally one for the employees as well, where it's generally a very happy place to work as well. And the senior team there worked extremely hard to ensure that was a culture of reward, recognition, and encouragement in terms of really building your career there. So I had 13 very happy years. I was very fortunate that I joined the board as the property director in 2012. So for those last 7 years that I was there, when a lot of growth was coming through, I was fortunate enough to kind of preside over that, and incredibly rich experiences with some fantastic individuals across all aspects of the fund management, the property development, the asset management, and so on, and the investment acquisitions too.
And then obviously moving on to a totally different business, which is an asset-light business of Watkin Jones. How did you transition between what was, I suppose, a real holistic growth engine at Unite to something that was hugely recognisable in the student housing space, but much more focused on seeking third-party sort of capital and funding development projects, and then obviously seeing those come forward, and where did that excitement come from when you moved over?
So I think the main sort of points of interest for me around Watkin Jones is that it had a very strong reputation as a property developer, and it had established a very strong track record of successfully developing for many years. And it had started to look at, and clearly had established a core capability within student accommodation, but it started to look at BTR. It was one of the earlier adopters of BTR.
Yeah.
There's no doubt that Watkin Jones is an incredibly entrepreneurial business. If it believes and perceives in opportunity which is worth pursuing, which it thinks it can leverage its core assets into, i.e. its land buying, its planning, its construction capability, its ability to partner with institutional capital, then it absolutely will do that. And I thought, and still feel, that is an incredible asset as a business, as a company. It's a great opportunity. And so I think the idea that there'd be much more growth to come within student accommodation, I think that was clear. As clear as it is today, it is, which is clear. It was very clear in 2018. I think you could see a big bow wave of future development from future growth in student numbers to come would support that growth into the future. I think alongside it, was this real excitement about diversifying into BTR. And you could clearly see why in time BTR would be a much larger sector, which it will be, much larger sector than student accommodation. And then even though it was fledgling at the time, there were discussions about co-living. And I thought what was really interesting, again, was WJ was open to that and looking at it, and arguably had already done a co-living scheme. There's one in Leeds, which it developed for AIG quite a few years ago, which in many respects is a co-living scheme and was incredibly, and still is, incredibly successful as a scheme. So I like the entrepreneurial side of it. I like the fact that you could really tap into growth. And I like the fact that they'd established a very good track record with institutional capital, being that sort of partner of choice. And I thought that was quite a powerful asset base. And the final piece, of course, is Fresh. Fresh is a very good operator. It's a very good property manager. It had grown well. It had been nurtured extremely well from the management team there. Rebecca Hopewell, who was one of the co-founders, and that sort of complemented the overall business, because not only could you offer a development solution for a brand new student asset or a BTR asset, but then you could also look to provide the property management, so you had the end-to-end, almost the one-stop shop capability there.
I just want to ask you two final questions. One is, you have, I suppose, across your experience in the army and Olympian, Unite, etc., inherited teams. But if you were building a team from scratch, what do you think the key attributes you would be looking for?
That's a great question. I think you probably do need to balance personality with capability. I don't think either trump each other, but probably the appropriate blend is really what you're after. I think if you've got the right personality and you are energized, then within reason you can learn whatever you need to learn. But at the same time, I think smaller businesses, or businesses generally in today's environment, need people to hit the ground running too. So I think it probably is looking for that balance between sort of attitude, approach, and capability.
Perfect. And there is also one question that we ask all of our guests, and that is, if you could reinvent one thing about real estate, what would that be?
I think when you can clearly see the big opportunity in co-living, and at the moment capital is getting interested, but I think quite quickly that will go mainstream. It'd be brilliant to see that accelerate, that catalyse a little bit more quickly, and some of that capital to come in, because fundamentally they're buying exposure to residential at a discount to open market resi. And I think that is materially attractive when you see it as a way to diversify away from your single sector exposure, which could well be your PBSA, or it could well be other aspects of that. And so it's probably how you see capital sort of adopt and really get behind some of these early opportunities.
So more of that belief, and perhaps taking proof from the other sectors and having belief that then applies to another addition within living.
I think that's right.
Absolutely, couldn't agree more. Perfect. Thank you, Richard. Thank you so much for coming and sharing all your incredible insights. It's been really fascinating.
Absolute pleasure. Thank you for having me on.
So thank you so much for tuning in to this episode of Reinventing Real Estate. It has been so incredibly interesting to get an insight into kind of Richard Simpson's fascinating journey, really key insights to leadership, being, a team member, being a team player, and using that to to your advantage throughout your career, almost whatever career you're in. And I think that's what's been so fascinating about this particular episode. So if you're interested in any of those things and the evolution of the living sectors, then certainly tune in to this episode, and make sure you also subscribe so you don't miss out on any of these incredibly insightful episodes. Thank you so much for listening.